Hi, welcome. Thank you for joining us for this virtual training on stock market fundamentals for business journalists. I'm Jenny Paurys, and I'm head of news at S&P Global Market Intelligence, and I'm also a member of the Cebu Board of Governors. The idea for this training was born out of GameStop's meteoric rise in share price earlier this year, which brought new attention to the role of short selling in today's stock market and prompted many business journalists to need to rapidly come up to speed on the proliferation of short selling so that we could explain that in our articles and maybe also to our family and friends. Short selling is just one of the mechanisms, though, that has made the contemporary stock market complex, even for those who report on it regularly. And this year alone, we've seen many examples of that complexity in the news. The recent implosion of investment fund Archegos Capital put margin calls in the spotlight last week, and Credit Suisse's profit warning of the wind down of 10 billion in supply chain finance funds linked to Greensill Capital has brought renewed attention to the risk of valuation inaccuracies. So this training session aims to help demystify some of these types of elements so that journalists on any business beat can better understand the fundamentals of today's stock market and how to pursue stories that cross its path. I'm joined today by three journalists who have developed expertise in aspects of stock trading. Paritosh Bansal is global editor of finance and markets at Reuters, where he oversees the work of more than 100 journalists across the globe who write about the financial industry and financial markets, including areas such as banking, stocks, bonds, Forex, corporate finance, and investing. His career has spanned more than 20 years, and he has led the news file across the spectrum from business to finance to economics to politics and general news, and has reported out of several countries. Thank you for joining us today, Paritosh.
Thank you, Jenny. Thanks for having me. Hi, everyone.
Esha Day is a senior markets reporter from Bloomberg in New York, covering industrial and automotive companies. And she's responsible for following the daily gyrations of the stock market, along with writing analytical and feature stories that can help readers make sense of that chaos. She previously wrote and reported on healthcare equities for Thomson Reuters and has also led a team of reporters. She has a master's of arts in health and science journalism from Columbia. Welcome, Esha. Thank you for being here.
Hello, and thanks for having me, Jenny. And hello, everyone. Very good afternoon.
And Declan Harty is a finance reporter with S&P Global Market Intelligence, covering U.S. capital markets, the Securities Exchange Commission, and Wall Street. He's a graduate of the University of Illinois at Urbana-Champaign, and he joined our newsroom 4 years ago. His work has previously been published by Bloomberg News, the Chicago Tribune, and others. Hi, Declan. Thanks for joining.
Thanks, Jane. Hi, everyone.
Our training today will take place in 4 parts. First, we will discuss the function of the stock market and its importance in business reporting. Second, we'll focus on the evolution of the markets in the past couple of decades, especially following the global financial downturn. Third, our panelists will share some real-world examples of how they've reported on the markets. And finally, we'll take questions from the audience. So let's begin. We'll start with talking about the function of the stock market and why we cover it as business journalists. And Paritosh, here I thought we could draw on your long experience in this field to get us started. So why do we cover stocks as business journalists? And beyond the spot story, how can a stock market move lead to a fascinating news article?
Sure. Thanks, Jenny, and thanks, and hi, everyone. So, let me try to answer it in sort of like 2 different parts, right? Like, so the very fundamental level at a simplest form, right? The stock market kind of does a couple of things, right? On the one hand, it allows companies to raise money and fund their activities fundamentally, right? Which in turn then leads to overall economic growth. And then on the other hand, it allows investors to help return on their capital. So essentially what it's doing is getting sort of idle capital invested into productive assets, right? And the return kind of incentivizes them to fund that growth. So in other words, essentially what's happening is the stock market is kind of acting as the mechanism, as the sort of the medium of exchange. It's an essential feature for a free market economy, and it sort of directs capital into productive assets. Now, for the markets to work properly, there's multiple conditions that must exist on top of it. But one of the important ones is that information that affects the value of assets, of stocks, should be good. It should be reliable, and it should be distributed widely in the marketplace. And I think that's principally where business journalism comes in, and people like us come in, right? A way to think about what we do is we're kind of leveling the playing field for everybody, right? And then we're playing the watchdog to help the markets be free and fair. So how does it kind of really translate in our day-to-day jobs? Well, so if you think about this, stocks are a unit of value, right? They tell you how much a company is worth. So when a stock price suddenly moves by a significant amount, and usually like a 3% is a good benchmark, right? It is a sign that something has happened. There's some information out there. There's something out there that's causing that move to happen. And then as business journalists, the job then becomes, depending on who you're working for, if you're working for Reuters or Bloomberg or a news agency or S&P Global, right? Like there's two things you kind of need to do, right? First is you report the fact of the move itself, right? And you sort of say, hey, this thing has suddenly jumped, and then you kind of go about trying to find out why that thing moved, right? Why the stock, what caused it to move? And so just think about this, right? The move can be about one stock, right? It can be about a set of stocks. It can be about sector. It can be about sectors. It can be about the entire market, right? Sometimes the cause for the move is apparent, right? Like there could be macro factors like news that shapes, views of future economic growth and policy pronounced on interest rates that would change the cost of funding for companies, right? Those could affect entire markets, right? Or policy moves could affect entire sectors. Or it could be about specific companies like an M&A deal or earnings information or a CEO change or something else that's specifically material to the value of the stock. And so quite often, though, the reason is also not immediately apparent, right? Often what also happens is the reason that people are citing, so when a stock moves and you call a trader or somebody else or an analyst, they may not know, but the reason they're citing kind of sort of explains it, but doesn't fully explain it, right? And so I think as journalists, one of the jobs that we need to do is keep asking the question why, right? Until you really get to the answer that's satisfactory and actually makes sense and explains in some kind of a way why the move has happened and it makes sense. You keep pulling on the thread, like you keep going to various people who might know about it, and you kind of sort of keep asking that question. So I think when you do that, it can sort of lead to really, really interesting stories, and we can talk more about it. I'll probably stop here for now, but like we can talk more about it down the chain. But like that's kind of the general sort of way I think we think about it, right? As you approach the market.
Thanks. I think that's very helpful and helps set the stage well for our conversation today too. And I like the idea of pulling on the thread. Esha, Paritosh was just noting trying to understand the mechanisms behind a stock movement. But companies can benefit from a rising share price, even when the increase in and of itself is not apparently led by fundamentals. So how has that mechanism of a benefit to the company of its stock price moving, played into the market the way the market fundamentally works over the last decade and a half or so?
Sure. And actually, thanks to Paritosh for, laying out the basics of why we cover the equities. I think that was really helpful. So, as a reporter myself, I think of the stock price as one metric that helps us kind of keep our nose on the ground and sniff out any hint of news. So it's what is happening, but sometimes it's also kind of a hint of what is about to come or what is probably going on that is not immediately apparent to us, right? So, as a reporter, I am not just, following just the daily ups and downs moves that we absolutely need to follow and is our bread and butter, but also how companies are using these moves to their advantage, right? So, for example, earlier this year, we saw the US stock market kind of rallying to these record highs on optimism about the economy reopening, the vaccines getting rolled out and stuff like that. And we saw this huge surge of these smallish companies trying to raise cash from the market to take advantage of the rise in their own share value. And we know for a fact some of the times these kind of surge themselves were not led by fundamental reasons. When we talk to these companies, I feel like I do that every day. I'm reaching out to a company, I'm asking them, why do you think your stock price is rising? And I'm pretty sure Paritosh and Declan will agree. 99.9% of the time, the company will come out and say that they do not comment on the daily moves, which is probably fair. Sometimes, moves are happening because of the mood of the market and has got nothing to do with the company per se. However, what I think is really interesting and it's really important for journalists to keep in their mind is that at the end of the day, companies try to use it to their benefit, especially if the stock is rising. So, this year, as I said, there were these companies who were trying to raise cash from the market and trying to capitalize on that, share price rise. So in this case, what happens is that a company is essentially trying to sell its shares to institutional investors or retail investors to raise funds that they can essentially use for company operations then. And this is a very crucial thing to keep an eye on these days to figure out what kind of offering it is. And I won't get into the technical details here, but will it be diluting the holding of current investors? Is the company selling shares or are its institutional investors selling shares? Oftentimes we see both happening at the same time. So now if a stock price goes up, a company can and sometimes should take advantage of that by raising capital through a stock sale. So, and this is where we are seeing that even the share price rise that was not due to some fundamental changes is helping the company bring about fundamental changes, right? So, case in point could of course be GameStop, even AMC Entertainment. We saw both companies' shares ripped in a speculative frenzy this year, and both have subsequently announced share sale programs. And it plays out in many different ways. Companies are sometimes using the stock market to their benefit and sometimes using ways that are, if not illegal, at least questionable. For example, during the late 2017, when we saw a surge in Bitcoin or all cryptocurrency prices, we saw every other small company come out and announce a plan to either mine some cryptocurrency or develop some kind of blockchain-based technology. We saw a really small, sort of under the radar food, like a flavored soda making company come out and say that they're going to delve into blockchain technology and nothing else, and the shares sold. And why do companies do these? Companies do these things because it then allows them to quickly boost share prices. And then if it's a genuine company, of course, it's definitely more than that. But in case of not so, genuine companies, they then keep building it up for some time, enough for it to either kind of tap the market for more cash or enough time for the directors to kind of sell their shares, make money all the time, retail investors essentially at the end left holding worthless stocks. So I think as journalists, and I'll end with this, the idea is to be aware of all these possibilities and kind of watch out for these signs in the market, especially in a bubble-like situation like what we are seeing with the EV stocks right now, when investors are showing an unusual level of interest in certain niches of the market.
And is that, Esha, is that how you would basically define what a bubble is? A certain area having outsized investor interest and that interest driving up stock prices perhaps beyond the fundamental worth of those companies?
Absolutely, but I think I think the last point is the most pertinent one. When you cannot sort of define in any credible financial model way why that value is being attached to a certain company. For example, I'll bring up EV stocks again. At this point, we are seeing multitudes of EV companies, EV startup companies that are saying, oh, we are going to come out with this really game-changing electric vehicle, but they do not even have a prototype to show for it. But investors are ascribing the kind of values that shows that they will be probably one of the market leaders. But there can't be so many market leaders, right? So so it's these bubbles also kind of tend to happen around these really new disruptive, when these kind of new disruptions happen in any industry, which is what is happening with electric vehicles and the auto industry. And the market has not still been able to kind of calculate who will be the actual winners and losers. So it's essentially playing this game of speculation, right? It's placing a bet on a number of companies. Some will actually become successful, but will they actually become successful to the degree that people are betting on right now? No, but then that kind of adds to the bubble and leads to this, what I call is a frenzy, essentially.
Yeah, thank you. One other term I wanted to ask you to define, we hear a lot about, and this sort of also back on the idea of what companies can gain and investors can gain off of share rises, whether they're backed by fundamentals or not. What is a pump and dump scheme and how does it work?
Sure. I'll take that question, but Paritosh or Declan, if you want to go ahead, let me know. A pump and dump scheme is, I would call it, it's one of the oldest schemes out there in the stock market, and it is essentially when a company or someone else or an investor in the company is pumping the idea of something. For example, if I come out, as I said, with the cryptocurrencies, a company comes out and with a press release or an announcement and says that I would like to make an investment in blockchain and make tall promises, say, in the next year I will be one of the top miners of cryptocurrency, or my blockchain technology application would do this, and this. And then we see, and it's a pattern. It happens across sectors, across different bubble-like situations, where they would keep putting out press releases and announcements, and do this big media splash thing, where they're constantly telling people, oh, there's a new headline every other day or every week, and it really feeds onto the retail investors' fear of missing out, right? So, let's say you have missed out on investing in Tesla, but you do not want to miss out the next Tesla that comes your way. So you invest in an EV stock or a blockchain stock, and you're hoping that, one day I'll become like one of those millionaires that Tesla turned out. And then at some point we see these kind of constant headlines just peter out. And then when we go and try to check on those, like the CEOs or the CFOs or even the top, say the board members or even the top investors, they have very quietly just sold their stocks off and exited. And as I said, it's just the retail investors who are holding essentially worthless stocks, because the company was not ever planning to do anything with it. So you pump the idea and then just dump the stock, make your money and exit.
Thank you for that. This is actually setting us up pretty well to move into our next topic, which is looking at the mix of investors in the market. I was wondering, Declan, could you start by defining retail versus institutional investors, and then perhaps talking about how retail investment has changed over the last 20 years or so?
Sure, absolutely. So when you think about the investing landscape, there's really kind of two constituencies, as Jenny mentioned, institutional investors, and these are large pension funds, 401k managers, large asset managers, money managers. So companies like BlackRock, T. Rowe, CalPERS, which is a large pension fund in California. These are large institutions that have a lot of money to deploy in the market. They're responsible for this money, and they manage it largely on behalf of beneficiaries or other people who ironically are kind of the retail investor constituency of the market, and that is people like us. Just if you're buying stocks through Robinhood, Schwab, Fidelity, TD Ameritrade, E-Trade, but you could also be buying ETFs that are managed by asset managers or such, and that is kind of if you think about the landscape today, and over the last year, I'm sure as everyone on this webinar knows, retail has taken on a much more outsized role than it has historically in U.S. equities trading. I think there's some data that shows that in 2021, retail can be attributed to about 23% of trading, and 2 years ago that stood at about 15. So it doesn't seem like a huge jump in the grand scheme, but it certainly makes an impact. And I will say a lot of that, if you look back historically, has been attributed to investing becoming more accessible. You hear Robinhood talk about kind of democratizing finance. It's sort of that same idea. Years ago, it used to cost $100 to trade a stock, just a single stock. And even I just did this for a story. Even just 2 years ago, the average cost between Schwab, Ameritrade, Fidelity, and E-Trade was about $6 to trade a stock online. And today it's zero. So it's right around 2019. Most of the major brokerages finally kind of succumbed to pressure that they had been facing from, the likes of Robinhood and these upstart fintech companies. And as a result, we've seen this kind of wave of retail come into the market over the last year that's really kind of changed how we think about certain dynamics. And I think it's put certain issues that I think we'll talk about later, sort of in the national conversation that a lot of people weren't talking about just a couple months ago.
Thank you, Declan. Esha, if I could turn back to you for a moment and dig into this a little bit more. So, how do you think that retail traders have really influenced the psyche of the market? For example, the role played by trading apps like Robinhood that was in the spotlight through the GameStop craze.
Yeah, sure. I think one way I think of the trading apps is that they have obviously made investing accessible to regular people, but it's very much the same way how, say, Twitter has allowed regular people to have a platform for their voices and opinions, and very similar to how sometimes when you are getting into, let's say, following a certain thread on Twitter and just following a certain kind of people and getting into like an echo chamber where a certain issue that is probably not such a huge deal in the real life seems like much bigger in comparison. What happens with what it's something that happens with these retail trading platforms, and not just like Robinhood and the other apps, but also like these online discussion boards like we saw again with GameStop, like Reddit, or say even Yahoo messaging boards. It's kind of like, if, for example, if I am following a certain stock, let's say it's GameStop, either on Twitter or any of these messaging boards, or I am on this app, which gives me more power than I had before. There has been this combination of several factors apart from the apps, right? So there are the apps that are really easy to use. Their interface is almost game-like. So, sometimes people don't have the sense of losing or making real money. It almost seems like points that you make or lose in a game. So that makes you more fearless. And along with that, there has been, people have been in a lockdown situation because of the coronavirus situation for the greater part of a year now. And then there has been the removal of trading fees by many exchanges. So that has really encouraged retail traders who are kind of having this outsized, disproportionate impact on markets. So maybe they're not dealing in as much money as the institutional shareholders, but they are being, as GameStop again showed us, they're being able to kind of influence the market in ways that, in a very concerted effort, that was previously unthinkable. And I think for journalists, it's a new challenge, but it's also, I feel, good and bad. Now, it makes it harder for us to now predict the stock moves on any given day. But it also makes it possible for us to now hunt for these data that these apps are generating. And now these data, I'll make it very clear, they're not always readily available. The apps are not, extremely eager to share them. They would share them sometimes according to their own whims and fancy. But just the fact that it is there, I think, is a big improvement for people like us who can now kind of go and find a source who would give it to us, or just hunt for the data through other ways. Another thing that I just wanted to talk about was like, how do we keep a tab on these trends then? So what I am doing apart from my like out and out financial sources, is keeping an eye on this Reddit boards, the Yahoo messaging boards. I spoke about Twitter. I keep a very close eye on Twitter, and I try to follow all the important people on my beat. But lastly, and I think this has become more important to me over the past 2-3 years than it was before, and that is listening really closely when I'm talking to my friends and family, and kind of I'm trying to understand the questions that they are asking me about whatever market event has been catching their fancy off late, right? And that gives me an idea about what, say, these non-finance, non-media people are paying attention to in the markets, because their influence on the market has now increased exponentially.
Thank you for that, Esha. And Declan, I'm going to take things a little bit out of order here, but I wonder if you wouldn't mind kind of walking us through the interplay between institutional and retail investors when it came to the GameStop short selling and stock rise story, because I think that may be a good case study for how these two types of investors can influence one another's trading.
Sure. So I think if you look at the GameStop situation, I guess I can recap it a little bit and we can go from there. But effectively what had happened was there was a hedge fund, Melvin Capital, which I'm sure everyone's heard the name of by now. And they were short GameStop, which in effect means they were betting against the stock. They were saying the stock is not, they had borrowed the loans. I won't go through the mechanics of shorting the stock, but they said the stock was going to come down. And this was based on the premise that GameStop, as everyone knows, is a mall, a strip mall, a video game retailer that hadn't really shown in their eyes much promise to kind of adapting to a changing dynamic and a changing landscape that was going more digital. And I guess people stream video games nowadays. This was kind of at odds with GameStop stock. So effectively what had happened, or at least what a lot of people have believed that has happened, is that you had a bunch of retail investors who over time had been talking on these discussion forums, as Esha just talked about, in Wall Street Bets on Reddit and Discord and Yahoo chats and so on and so forth. And they had kind of built up this following to essentially say, no, we believe in GameStop. I think there are a couple different groups here. I think some people believe in GameStop. They were maybe customers when they were young and they wanted to support the business. I think there are other people who viewed it as kind of a slight against kind of the everyday man, and they take issue with the concept of short selling, which is not a foreign topic, a foreign idea on Wall Street. Even the former head of the New York Stock Exchange has come out against short selling in the past. He's called it un-American. So I think there were a couple different factors at play, but essentially what you had was this hedge funds, these group of hedge funds who were betting against the stock. At the same time, you had retail investors who were conducting the squeeze, and essentially they had pushed up the stock so much that the hedge funds were losing money on their bets. And over time, that kind of dissolved, and we've seen GameStop kind of go into a little bit of a wild ride here. But that is to say, I mean, I think there's it's raised a lot of important questions. I think in part of our jobs as journalists is to try to weed out, as Paritosh said right at the beginning, why GameStop was happening. And I think we've seen some instances since where we've seen hedge funds who are actually on the up and kind of hidden in that retail pack who are betting on GameStop packages. So a lot of people painted this as maybe a David versus Goliath story. I think there's a lot of questions about whether it was quite the David versus Goliath story, but that is not to say that retail did not play a role here, because it certainly did. But I think that's part of our job, is to kind of suss out who is actually on each side of this trade.
And I think that gives a good example of what Esha was talking about with the punching above their weight, right? In terms of the impact that retail investors are able to have at this moment in the market. Paritosh, you have a long view of reporting on the market. Have you seen this type of outsized influence by a player or an investment vehicle or some kind of element of the marketplace before?
Well, So, I mean, well, first of all, I think you guys made a lot of really, really good points there about sort of like a whole range of things, from sort of what could be principle of watchdogging what's happening there, to seeing what sort of understanding this new retail phenomenon. I mean, so there's been kind of various, I think over the years, there's been various sort of blow ups that have caused and rippled through markets in various ways, right? And it's sort of one of the features of financial markets generally is that there is a lot of interconnectedness, and the parties and counterparties, right? I mean, even if you sort of at a very basic level look at it, right? There's your investor, there's your bank, and then there's the company. So, and the bank is in the middle of sort of helping them issue shares, and then they're sort of making financial products and extending credit, and sort of, helping the investor sort of manage their risk and make money, right? And they're kind of collecting fees in the middle. And so what ends up happening is one side of like what a blow up or a small event in one end of the market can end up sort of blowing up into something really big and snowballing into something really big. And so like GameStop, essentially, some of the points that Declan was raising was really good, like, because I still fully don't understand what happened with GameStop. I don't, right? I mean, the last month, when wasn't it Ryan Cohen sort of tweeting pictures of the Petco or the dog, right? And the stock starts to take off. And then, okay, you sort of think, okay, maybe it was a stimulus checks going into the stock market, but then the last round of stimulus checks going into the stock market, you didn't have quite the same reaction. And then so it's as a phenomenon, I think it also goes to the point that what Esha and Declan were raising. There's lots of unanswered questions, right? I mean, what really happened here? And is it really the case that this retail sort of trade that we saw was like one monolithic trade that happened, or was there something else there, right? And then if it happened, then can it repeat itself is the other question. Because when you look back, I think the last time retail, it's been kind of on and off, right? But the last sort of memorable event was when Musk, I think 2017-18 period, when he was going at it with the shorts, right? And he had this huge following on Twitter at that point, and sort of winning. So it's a really interesting sort of thing, right? But these kinds of events. But again, the flip side of the GameStop thing is, while it was really buzzy and obviously fascinating, right? But there was also a small part of the market, right? And like I remember, like some of the reporting that we were doing at the time, and what we would hear from is like, oh, it's a sideshow. That's kind of overstating something. It wasn't really a sideshow, but from a global markets perspective, it was a fascinating phenomenon, but it was kind of contained, right? A bunch of hedge funds that blew up and they took the hits, but it's fine, right? Like the world didn't come to an end. And so I think that sort of thing keeps happening. And as you're kind of covering the market, you need to sort of understand the ecosystem that works, right? And you sort of, as you're reporting it out, like you will not have all the answers on the front end, but as you start again pulling at the threads, right, like you will come to really interesting examples, right? And let me talk a little bit about Archegos, for example, right? I know, I'm sorry if somebody else was going to talk about this, but like just in that front, right? I mean, think about what happened here. So Wednesday, it was, I think, a Wednesday or a Tuesday, that last week of March, right? The 23rd or the 24th, when Viacom CBS came out and did a stock offering, right? And, it was like a $3 billion share sale, convertible straight, right? And essentially what happened was the stock tanked, which is purely logical, right? I mean, stock tanks because value gets diluted. But then it just kept tanking. Like I think on Friday it went down further, right? And so that's when you start asking the question, what's going on, right? And so when we went around asking the question, oh yeah, somebody is selling a big chunk of stock of Viacom and Baidu and the other sort of shares that were involved in that point, right? Okay, so then you ask the question, why? Or like who and why, right? So it's the big banks. Why are the big banks selling it, right? Oh, because they're unwinding the trade. What trade with whom? Oh, it's a company called Archegos. What the hell is Archegos? What's the trade that they had, right? What is the position that they took? Oh, it was something called total return swaps. Okay, it's not a word that you hear every day, but then you go find out what a total return swap is. And you figure out, okay, it's basically another instrument, a financial product of sorts, which lets this guy's, the investor, place really huge bets without putting up a lot of cash upfront, right? And the risk is kind of sitting on the bank's books. And so, the shares are being held by the bank while these guys are basically putting on debt and making bets which magnify the returns on both ends on the returns of those assets, right? And so when Viacom stock actually fell, that kind of snowballed into Archegos kind of going completely bankrupt, right? And so that sort of thing and that question and that thread, right, can sort of lead to really fascinating stories that you kind of now see, right? And when do you stop asking that question is the thing, like when you get the real answer. So I think that is the kind of sequencing that, I don't know if I kind of answered your question, but that's how I was thinking about it. Yeah.
Now, if I was sort of starting out on a beat where I felt like I was going to need to be able to report on stocks, my take on this conversation so far would be that there are a lot of complex reasons why stocks move, and it's perhaps a more complex landscape than it has ever been in terms of understanding that. Esha spoke to this a little bit earlier in terms of the things that she monitors and the places she looks for some of that underlying noise and some of that input. But Paritosh, where do you suggest your teams look when they're trying to uncover this and it's not obvious or evident as to what's going on?
Well, so I mean, I don't have a good answer, right? I mean, it is everything. And honestly, right, I mean, I kind of, during GameStop, I kind of felt like my 75-year-old dad fumbling with his iPhone, right? Like, I mean, there was things like Discord and okay, Clubhouse, right? Like, I mean, yeah, I'm getting, it started to feel like you're out of it, right? There's sort of, just to Esha's point, right? The number of venues in which this kind of thing, and I think that's the complexity that the retail trade has started to build as well, is the number of venues in which information can come out is one expanded quite a bit, right? So we guys, for example, have a global team which sort of is constantly adding to the list of things they're monitoring, from Twitter to Clubhouse now, right? And so that's one. But then I think at some point, and this is there's some point you need, like, it comes down to sourcing, and like as journalists, I think it comes down to your ability to be able to pick up the phone and call like 50 people if you need to get to the answer, right? And there is really no good substitute to that, right? I mean, I kind of think like, yeah, you'll read the research notes, you'll sort of follow some podcasts or whatever, or you'll kind of read whatever the competition's doing, but there is such a flood of information that comes into your mailbox, plus there's a proliferation of the number of places where market moving information is now kind of emerging, right? And then there's sort of added complications of not really understanding sometimes what can move markets, like the ice cream cone, right, in GameStop. So it's a more complex world, right? And the only way to make sense of it is to talk to more humans who are doing it, right? We have to kind of remember that this is eventually it's a people business, right? People are behind these things. So go find them and call them. And if you don't get to the right guy, ask the other guy, right? Like, go GameStop, what happened inside, go find and see who all you can talk to, right? If the company is not going to comment on the stock through the front door, go through the side door, right? Go on LinkedIn. There's like so many, the other flip side of it is there's also so many other venues and sort of ways for us on our fingertips today to get hold of that information and find the right people to get it, that there's little excuse to not get it either. I mean, you know what I mean? So, but that's my, so, I mean, I don't have a particular set, like I'm keeping watch of various things and there's stuff coming at me, but it's really, it's an ever expanding universe of sources.
Declan, you're a little newer to covering this than Esha or Paritosh, and you've built this coverage in our newsroom for the past 4 years. Do you have any sort of suggestions or advice you'd offer journalists who are going through the journey that you've just been on in terms of how to build out that source book or those places to look and understand more of what's happening underneath the surface?
Yeah, I mean, I could echo everything Paritosh just said because I think he kind of hit it on the head. Because a lot of it does boil down to sourcing, and I will say the thing that I wanted to add was it kind of depends on your outlet, right? And how you're going to be approaching these stories, right? If you're a newspaper in Chicago, and I just bring up Chicago because I'm here, you're going to cover maybe GameStop differently than a newspaper, than the Wall Street Journal or somebody else, or even a newspaper in Texas where GameStop's based. And I bring up Chicago because Citadel, which of course is a huge player in this, is based here. So it sort of depends on the lens you're going to be covering it, but I mean, it's difficult, I would say, from my experience over the last year, obviously because everyone's on lockdown, and so as a result, we're limited in our ability to just ask people to get coffee. And I think that's a huge resource, is just trying to set up casual on background conversations with potential sources and build those relationships from the ground up. But I will say, I mean, there's still ways to do it. And like Paritosh just said, going through LinkedIn, trying to find former employees, current employees, kind of that middle management level that seems to be kind of the sweet spot for people who know what's going on and might be willing to and able to explain it. In terms of kind of just learning some of these topics, because I cover market structure and these are very intricate in the weeds topics like payment for order flow and clearing and settlement times, it boils down to just asking as many questions as possible and reading pretty much everything that you can. I mean, I've read a lot of academic papers on high frequency trading and topics that, I would not like to be spending my, Thursday evening doing, but I'm doing it. And it takes some time to learn these topics because they are complex, but it can be worth it in the long run, I would say.
Let's stay a little bit with what you were just talking about in terms of covering something differently depending on the news outfit you work for and your audience. So you covered GameStop for our newsroom, and we have an interesting readership because it's a subscriber-based readership that is made of a mix of sector-focused and generalist, often investor-focused type professionals who likely have an understanding of how shorting works in the marketplace, for example, but we also have types of readers who may not have as much of that understanding. So how do you tackle a story like that in understanding your audience and how to translate something complex like that and find an angle that's going to resonate and be different than the angle that the Chicago Tribune is going to take?
Sure. I mean, I think if I look back, or I think back to our GameStop coverage, we did a couple different things right in the moment. I did a story on trying to get into the retail trader psyche and talking to different people who were chatting on Reddit and trying to see what exactly drove them at the end of the day and why they were investing in GameStop. Was it, like I said earlier, was it a matter of they believe in the company? Was it a matter of they want to take on Wall Street, so to speak? These different questions. But in terms of kind of tackling these issues like payment for order flow and settlement times and whatnot, I do think, I think I think these are a lot of these are people-based stories. They're complex topics and they come into, they carry a lot of jargon with them and they're not easy to understand and they take time. But at the end of the day, I mean, like Paritosh said, I mean, there's people at the other end of these things and they can not only explain it to you, but they make for interesting stories and interesting ways into these topics and these ideas and these questions that are being raised up. I don't know if that answers your question, but I think that that's at least one way I kind of think about trying to cover these topics and trying to find a new way into it, because the way somebody, an old editor of mine, described covering market structure and markets more broadly, at least in this specific lens that I bring to my job every day, is kind of covering the business of trading. When you frame it like that, it's a much more easy topic to understand than market structure, which It's a very
Can I-
vague topic. Sure.
This is getting me interested to jump in on something, like to add to what Declan's saying, right? So several years ago now, I used to cover white collar crime, and I'd gone out, like, this is around the financial crisis and the run up to that period, right, or around it, and I'd gone out with this FBI source of mine. This guy was like a history major. He was in the white collar unit in New York, but he was a history major. And before joining the white collar unit, he'd spent all his time doing narcotics or something, kicking down doors and stuff like that, right? Like, so he was kind of like far, far away from Wall Street. And I was like, dude, you're kind of bringing cases on CDOs and CDO squared and CLOs and ABS and MBSs, right? How do you do that? Like, how do you kind of like, you need to kind of understand all that and then actually nail somebody and stand in front of a judge and say, this guy lied or did something wrong, right? And so he said, listen, it all kind of boils down to a very basic idea, right? Everything. And it's essentially who knew what and when, and did they lie about it, right? Pretty much every case comes down to that. And that was kind of like, it still sticks, it's kind of seared in my brain. It's kind of like a guiding principle, right? Like, it always doesn't matter what the story is, right? And it doesn't matter who your audience is, whether it's super professional specialist, like obviously the format differs. Like if you're putting out a headline, it's different. But in general, when you're writing a story, write it without talking down at your audience, but like explaining it, right? I think nobody minds if they know it, they don't mind that. And if they don't know it, then they really appreciate it. And if you don't, then the reader's turned off in a lot of cases. And the ability to kind of distill and see things in sort of very, very basic human universal terms, right? Like, it's like one of my editors, who's like this absolutely brilliant journalist, keeps saying, talk to me like you would talk to somebody on a bar stool, right? Like, talk to me and explain to me, the story we did about Robin Hood sort of not reporting fractional trades. Explain it to me, right? And it works. And so I think it's like one of those things about the specialization of this and the jargon of this. And one of my sort of I've been on a warpath in my job trying to get journalists in my team, is to think about, it's like, don't hide in the fog of the jargon, right? Don't be afraid to say, I don't understand what the hell that means, right? Go ask that question. And like, as journalists, we have the license to ask questions and ask dumb questions, right? And everybody, and so go find out and get to the very, like, understand it as well as you can so that you can explain it in English, right? I mean, like, my team makes fun of me because I'm always like, can you write that story in English? And I'm like, yes, that you can do. And I think when we don't do that, and a lot of journalists don't do that, often because it's easier and quicker to do it that way, and sometimes it takes a lot more work to get to that sort of know everything about it. What you end up doing is you miss the real story, right? And so I think like that sort of, to Declan's point and things, right? I mean, as you're kind of looking at your audience, right? Think about them as intelligent human beings, right? But not subject matter experts, right? And I think that's true. Like at Reuters, like we're kind of doing everything from super specialist, trader to a consumer who's going on Reuters.com. Like that's the range of audience that we have, and you should be able to, your story should be able to speak to them, and they should understand what you're saying.
That's a great point. And Esha, you similarly write to quite a range of audience, I would think, on your beat and for Bloomberg. Can you talk a little bit about how you've approached covering a very hot button company like Tesla and describing its profile in the stock market to a very wide-ranging audience?
Yeah, sure. And so yeah, covering Tesla and talking about different kind of audiences as well, right? So even in Bloomberg, I cover Tesla from a stocks perspective. So I am the reporter who's just essentially tasked with covering how the stock is doing. And this doesn't happen for every company, but for something like Tesla, you need this. So we have a reporter who's covering, what the company really does, and I'm also covering what the stock is doing. And for example, last year, Tesla has always been a really interesting, volatile stock to cover, right? But last year was like even more volatile. It was just a crazy year, even by Tesla standards. So, and and this will touch upon a lot of the things that we discussed, that Paritosh and Declan brought up as well. Like sometimes you just don't have the answers. And to Paritosh's point, just be upfront about it, and just try to make an intelligent, I won't say guess, but that sometimes all the sources that I'm talking to, they are also essentially making intelligent guesses. So you kind of reflect that in the story. Tesla has a really interesting mix of investors who are so down into the nitty-gritties of the stock that I sometimes feel like even Musk himself will probably will be stopped at his track to answer some of those questions, that they go into the real nitty-gritties. And at the same time, of course, Tesla also has a lot of people who just like the kind of consumer approach of the company. It has, of course, like a really flamboyant CEO who captures a lot of people's interest. They probably don't even drive, or they definitely haven't ever driven a Tesla for that matter, but they're just interested in the stock for that matter. So it's really important for me whenever I'm writing a story to kind of find a balance in my story that would make both these camps happy. So I cannot go into too much of a nitty-gritties, but every time I write a story, whether it's a negative story or a positive story, I get hate mail from either camps, right? Like people never are happy. They're always thinking there was something more that could have been done. And these are always from really invested people in the stock. That makes the work tougher and makes me always like, if for a much less interesting company, I'll probably stick to talking to more of my financial analysts and reporters sorry, not reporters, but financial analysts, financial sources, traders, and the like, right? For Tesla, I would go, I would try and find out a retail investor who will talk to me, much more openly than, say, any other institutional investors would talk to me, right? So, and that, I might not be able to quote them in my story. They might not be, flexible or comfortable with me doing that, but it always informs my story in a way that I feel is not possible without talking to those people. And of course, with Tesla, I think, it's a big advantage that there's just like so much of online content that you can see, so many experts writing about Tesla, that if and over time, of course, you have to keep reading these people to kind of get a sense of who is agenda driven in some way, or who is just writing from, and like an interest perspective. They're probably just interested in the technology aspect of the story, and being able to pick and choose your sources from that I think is a blessing. In case of Tesla, not every company would have that kind of expert base, of course. But yeah, I try to tap all of these unconventional sources to get that kind of mix or balance in my stories. I don't know if that was a good answer to your question, though.
That's a great answer. We have a few minutes left, and I want to encourage the audience to send along any questions they may have in the chat function, if you're able to get there. And I'll let Tess from Cebu let me know if we have those questions. In the meantime, was wondering if we could go through any more kind of real world examples from you, Declan, or Paritosh from you, on how you've pulled at the threads of one of these stock driven stories and brought it to life. Declan, you want to hop in?
Sure. So there is one example that kind of came to mind, and this was a relatively recent one, but ironically, I didn't notice it from the stock. I noticed it from the exchange side of things. I cover stock exchanges, and This happened in late 2020. There was a new stock exchange. It's called the Members Exchange. A lot of people may have heard of it. It's very high profile. It has a lot of big backers. And suddenly, within like the span of 3 days, their market share had popped by about, if I'm remembering correctly, I think it was trading around, I think they were accounting for about a half a percent of total US equities trading. And they suddenly popped to like 3% for like 3 days. So it was one of those kind of, to go back to what we were talking about earlier, one of those sort of examples where it just set off some alarm bells in my head to start asking why and what was going on. I mean, had they said had somebody flipped a switch and said, yep, we're going to start trading on Memex. This is our new exchange, and they just started directing tons and tons of orders there. It was one of those situations that I thought would maybe going into it be a little simpler than it was. Turned out to there was some pricing mechanisms that they had rolled out that had influenced how certain orders were getting executed there. And I won't go into the wonkiness of it all because it is extremely in the weeds. But I do think it was one of those recent examples I've had, at least personally, where it boiled down to kind of going into it and trying to talk to as many different people and figure out what was going on, because it wasn't like the exchange had put out a press release saying, hey, we hit 3% market share, this is great for us, and we want to talk about it. It was one of those examples where, they were not super forthright. They did not want to really dig into it. So it was a matter of kind of going around that back door and talking a little bit about and trying to figure out what at the end of the day was going on.
And continue to track that something was clearly going on, right? So there was an answer out there to be found. I have a couple questions for the audience. One is for additional resources such as books, articles, podcasts that you would suggest as useful for honing one's understanding of stock market fundamentals. Paritosh, could I start with you?
You know what? I don't have a good answer for an entire book. At one point I was actually sort of spent some time reading the basic CFA course, which is actually pretty good. I mean, it's a little intense. Like I couldn't finish the whole thing, unfortunately, but it is worth, if you are really interested, it's worth sort of, I mean, that's a good resource because, and especially if you kind of take one of the Bloomberg's got a pretty good course on it as well, which kind of really breaks it down to, Bloomberg Prep has a course which breaks it down to like little bite-sized things, and they actually are very good at explaining what's going on. That kind of a thing is a good thing. Like, I mean, a lot of times I just kind of, Investopedia, believe it or not, actually has fairly good information when you're kind of looking for some basic definitions that you can then check otherwise. And then I think it kind of, yeah, I've kind of done a lot of my learning by actually then asking people, right? Like when you kind of go to a source and a good sort of banker and say, explain this to me, right? And that's surprisingly, people are very happy to talk down at you, so so use it. But that would be my kind of off the top of my head list.
Mm-hmm. Esha, do you have any recommendations for sources of more information to help acclimate yourself to this wild world?
I would actually, second Paritosh here. I love Investopedia to kind of start familiarizing myself whenever I hit upon a new term. I think they kind of they do dumb it down sometimes, but they dumb it down enough for me to have like an initial grasp on stuff. And then I too actually dial a source, which I think is actually kind of the shortcut, because they love to talk about the stuff they work on, and not enough people I feel let them talk about these sometimes dense ideas. So yeah, that's actually my go-to shortcut way of finding out about stuff. I don't have any books to recommend either, actually. Sorry, that was probably not very helpful.
That's fine. Declan?
Sure. Yeah. I mean, I think if this is something that folks are interested in, like starting to do and starting to work into their own beat. Maybe they cover another kind of part of business journalism and they want to start learning more about stocks. I think, there are a lot of podcasts out there. I mean, one that comes to mind is Planet Money. It's just a great listen, but also they're not afraid to go into the weeds and they do a great job of explaining it, and they stay pretty on top of kind of what's happening in the news. So even just listening, I've had experiences where I'm listening to Planet Money or another podcast like Odd Lots, or the Wall Street Journal has a good podcast. Just learning, and it can spark different story ideas for you. On my beat, there's there's a ton of books. Weirdly, it's for such a niche topic. So I mean, obviously, a lot of my sources would probably not be happy with me recommending people read this, but Flash Boys by Michael Lewis is a big one. Flash Crash, similarly named, just came out. I think that's by a journalist at Bloomberg. There's a good deal out there, and I'm actually reading one that I think a lot of people view as kind of the fundamental book for stock trading right now. I believe it's called The Fundamentals of Stock Picking or Stock Trading. I don't know. It's from like 1900, but it's a lot of people attribute it as a very good read for kind of how Wall Street worked in its early days. So.
Excellent. Thank you. And I am also a huge Planet Money fan, so I'll second that one. We've reached the end of our session today. I'd like to thank our panelists for lending their expertise, and all of our attendees for joining in the discussion, as well as our Cebu staff for helping with logistics. I hope you've all learned a bit along the way and feel more equipped to delve into the rich world of stock market reporting. Thank you. Cheers.
Thanks, Jenny.